Alrighty, good morning traders. It is Monday morning. I have just finished my fasted workout and also cardio first thing this morning. I'm a bit down on the weather this morning. I'm sick as a dog. And the only reason why I'm sick as a dog right now, guys, is... no, I wouldn't say sick as a dog. That's bullshit. I'm still doing this bloody recording for you. It's only because of the, I've been pushing myself too hard. And a whole bunch of other stuff, so it's so important, guys, when you're going through life, you take responsibility for everything in your life. You don't just say, oh, suddenly the flu got me, or and all that sort of stuff, and and all that sort of stuff. It's like, no, the flu didn't bloody get you. You've been eating too much fucking ice cream. You know what I mean? So anyway, I feel a lot better after I go into a nice cold shower for a couple of minutes for recovery. And then a nice good refueling drink, amino acids and stuff like that. So anyway, onto my trading. All right, so I want to give you guys a bit of an update on my trading, and hopefully you guys can take something from it and go from there. Last week was a really good week for me on Saturday morning my time, which is Friday close for the Americans. I got out of one trade. Why? Because it was the time to get out of the trade. It wasn't about holding on to make money. This trade, I actually thought it was going to be one of those really big winners for me. Like a 500% to 1,000% profit. And but guess what, guys? That was my thoughts, and that's what the setup was. But it just didn't work out to be that way. So, and the reason why it didn't work out to be that way, I didn't get a loss. I still got out for a profit, but I was in the trade for a few weeks, and then it basically broke below my exit level. So I needed to get out of that trade, right? Sticking to the plan, trading well, and I'm really happy that I did that because that's all about trading well, right? When you trade well, you make money. When you focus on money, you don't trade well. Make sense? So I did that, and plus also I got into another really good trade. So and that was actually for the stock market. For the forex market, guys, I only took one trade the whole week. I trade anywhere between, say, 6 to 10 hours a day, somewhere around about there. Active, looking at the markets and looking at the charts. That's what I look at, and that's what I trade. And yeah, there was only one trade there. And the one thing I want to impart onto you is that for me, I'm so focused on taking good quality trades, not just taking bullshit trades anymore. You know what I mean? Because it's the quality trades, right, that we need to really focus on. It's the quality trades. That sun is absolutely gorgeous today, right? I'm so grateful to be alive today. It's those quality trades, right? And then it's so weird because the thing is, if we trade a lot, we're generally over trading, and therefore we're going backwards. But if we don't trade a lot and we're just waiting for everything to line up properly, and I know this might sound weird, right? But you're also that gut feeling is also saying, yeah, this is good. It's not like your ego going rah 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 rah, like this is a really good trade. You're gonna make a lot of money, blah blah blah, right? Those trades never work out, by the way, if you guys have realized. But it's that gut feeling, right? It's like everything technically lines up, but it's like the universal, the intuition, right, guiding you and say, yes, this is good. You know what I mean? And the more you can get in more you can tap into that, the better you'll be as a trader. And so that's my focus. So when looking at that, guys, when trading the markets, it's so important to, or should I say, for me, my focus is not over trading, and my focus is just continue to take those really good setups. Now, also what my focus is this week is continually to look at those long-term charts to see where we are in the cycles. So what I mean by that is that I trade on the stock market, for example. I trade the daily chart. Okay, so it's so important to understand how to read that weekly chart, right? So for example, if I'm looking to get into a bullish setup in the stock market, okay, but then I'll look at my weekly chart, and that weekly chart has been going up for now basically for a month, pretty much straight up, you know what I mean, or a month and a half. been going up, little sideways, up, us, little sideways, up, up. So if I look at my chart on the weekly chart, which is the big trend, and I say, okay, we've been going up for quite some time and I'm getting an entry signal on my daily chart, I shouldn't get into this. Why? Because there's a good chance, right, that weekly chart is going to turn around. It's going to also drag down. Do you know what I mean? Because if you look at the weekly chart, it does the exact same patterns. So understanding, are you getting, the question is, the best entry signals are at the start of a new phase. So you have like a counter trend pullback, and then you have a price phase, right? Yeah, price phase, right? So you got time phase, you got price phase, you got a counter trend pullback, and so on and so forth. So if you go to get in on a trade on the daily chart, and you're looking to hold, say, for a couple of days, maybe even a couple of weeks, but then you look at your weekly chart, and that weekly chart, as an example right there, that weekly chart, right, has been running on for quite some time. There's a really good chance that weekly chart's going to turn against you, and that trade's going to be a losing trade, right? It's all about having that price and time being balanced, and that's one thing that's really, really important to understand. And so yeah, so that's basically one thing that's I'm going to be really, really focusing on this week in my own trading, because that's where I know that I can keep fine-tuning the way that I'm entering the way that I'm looking at the markets myself. And just even recently, last night, I was going past a couple of my losing trades, and I realized at least one of the trades I shouldn't have even taken. Why? Because exactly what I just said to you there. That weekly chart had been going up for about 2 months overall. It was just going up, and then we had a couple of sideways weeks, and then we continued up, but it didn't really have a good pullback on that weekly chart. So I ended up getting on an entry signal, had a small loss on that trade, and now I look back, I'm just like, oh, look, I can learn from that, and I keep a journal of all my trades, no matter what. Every single trade I take, that way I can sit back at the end of the week, at the end of the month, say, okay, how did I go this month? What can I improve on? What do I need to focus on? And so on and so forth. So looking at that weekly chart, right, is always really, really key to see where we are in that trend. You know what I mean? The highest probability trades are after we've had a significant sideways movement or a significant pullback, and then we start a new run, right? You'll see this on the way the markets work, right? If the overall weekly chart is stepping higher and we have a nice good pullback on that weekly chart, but then the daily chart has a nice good bullish move, guess what? That's now a powerful move, because it's like a trend continuation type move. And that's really, 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 really powerful for trading that way. So that's one thing I want you guys to just look at how that long-term chart. So for example, if I'm trading a 5-minute chart or a 15-minute chart on the Forex, which I do, I need to keep an eye on that hourly chart. Where are we in the cycle? Are we in a price phase where the market's been trending, and now on the 5-minute chart I'm getting an entry signal? If so, then it may not be a good time to get into it. Do you know what I mean? If I same as a 15, if I'm getting a nice 15 entry, but the 60 minutes and so on and so forth, right? Same for the bearish setups, because you'll see so many times, right? You'll see so many times what I call the sucker breakout, which is like the last breakout, and I've had losing trades so many times in the past from that sucker breakout, right? Because I personally like to take breakouts, or not breakouts, but I like to get in on start of the moves, which gives me a high probability I'm getting now start of the next big price move, which means a trending move, either up or down. That's what I'm trying to jump on there. So I'm waiting for the big guys to have a rest for a while, and then I'm looking to jump on their coattails to ride it up even more. So that's what I'm always looking for. I'm always looking to get on that there. So as before, like the 5-minute chart, if I get an entry signal on that, I need to always focus on where are we in the overall cycle, because I guarantee you guys, a lot of those sucker breakouts are happening after the market's been running on for quite some time. There was also there was a trade just recently that I got into. It was actually from Dunkin' Donuts, and when I got into the trade, you guys can check out Dunkin' Donuts. It had a breakout, and I got in on that breakout. Everything else lined up for me, and I was happy to take it on Dunkin' Donuts. And the question mark was for me was price and time. Had it done enough time? And at the time I took it, I'm like, oh, it's okay, right? I took it. And the very next day, it didn't do much. It just had a little doji bar, so it didn't really do much. I'm just like, you know what? I'm really making this shit up right now. I shouldn't be in this trade right now. I looked at my weekly charts. It was a long term. We had a long run up and then a very small sideways period. So I knew that at the back of my mind that was going to be a sucker breakout. And 3 weeks later, it ended up rolling over, and I would have had a big loss on that one there, but I had just had a small loss. That's just an example, guys, of how the markets work, right? They go for a run and they pull back. They go for a run and they pull back. So my job is now to see where we are, keep a real big eye on where is the overall long-term view of this stock that I'm looking at, or index, or forex or futures or anything like that. Where are we in the cycle of that? Because if we're looking for a good long-term trade, like a good trade that has the potential to run on for big profits or lots of points. I don't like to talk in profits or dollars and stuff like that, because I try not to focus on money. I try to focus on trading well. Then it's getting in on trades, right? When you understand that higher time frame, such as the hourly chart if you trade in the short term, 5 minute, 15-minute charts, such as and such as also the also the weekly charts if you trade in the daily charts, and so on and so forth. So we're looking at those things there. You can start to see where we are in the cycle and just analyze price action. Forget the indicators, forget the moving averages or stochastics or anything like that. Take everything off the charts and just analyze price actions. Look at that weekly chart and see how it flows. Because remember, the weekly chart is really what the big guys are thinking. Big guys are thinking and feeling. And as long as they're raising their prices like they have been doing on the Dow Jones, like the Dow Jones, they've been going high, low ever since Trump was elected. And that's the reason why we haven't had a decent pullback yet. So that is my focus now, guys. When I'm trading the markets on all the markets, that is where my focus is just fine tuning my entry points and really honing in on what that longer term chart is telling me, meaning that high time frame, the weekly chart, if I'm trading the daily chart, and so on and so forth. And just really seeing and asking myself in the question, where are we in the cycle? Have we been going for a run in that direction for quite some time? If so, we're due for a pullback or something like that, and it's a very big, it's a much more riskier trade to take. But if we haven't been, and we're getting a nice little high low, and we're getting a nice little bullish trade on that daily chart, that's where the most highest probability trades are. Makes sense? So you want to understand. And I originally learned this from one of my earliest mentors back when I first started. And he always used to say, we get in on the daily chart and we're looking for a move from 1 to 5 days. That's what he was looking for, a 1 to 5 day move. But he was also saying that when you get on the daily chart, if you go to the weekly chart and it's already in 1 to 5 weeks on the upside, guess what's likely to happen? That's likely to turn around. So that's a less probability trade. This is all about just fine tuning what you're looking at in the markets, right? It's all about fine tuning and then keeping your standards high and getting better and better and better each week. You know what I mean? So for me personally, what I'm doing as well too is, for you guys that have been following along, I trade a lot of out of the money options. Well, I'm not doing that anymore. And hear me out for a minute, okay? If I'm trading out of the money options, all right? If I'm trading out of the money options, I'm accepting risk up front, because most of the time when you have a loss in those trades, it's like 80%, possibly 100%, right? Out of the money options, because that's the way they are. But if I'm so say for example I'm risking $5,000 on that trade, right? So that's 100%. So I put $5,000 on the trade. I'm trading out of the money options, and I'm happy risking that at that, say, $5,000. Where if you trade in the money options with more than 30 days to run, in the money options not just in the money, but like if it's just in the money, or go even second in the money, well, they're less riskier options, right? And more times than not, you can get out of the good trade if you manage it well from a good 20 to 30%, right? So if I now go trade, say, $20,000 a trade, right? If I now go trade $20,000 a trade, and I have a 20% loss, what is that? That's $4,000 loss. That's actually what I'm risking. That's actually what I'm roughly risking if I'm trading out of money options, right? Hear me out here. And this is the way that I used to trade it all, but now I don't know why I switched. I'm just letting you guys know where I'm in the cycle of things. And so if I trade in the money options, and I actually did this just recently, a trade I got into on Saturday morning my time, I did this. I load up a bit bigger, but my risk is my risk is the same. But hear me out. If the trade does run on for a good profit, guess what? Now my percentage is based on my my whole thing. So if I trade out of the money options, right, and I put on $5,000, it's a much more riskier option, right? You can go that thing can go to zero like that. 80% loss overnight, very, very risky. But if it goes for a run, you can generate a good profit as well too. 100%, 200% return. But hear me out. So if the out of the money options make, say, 200% return, so we're talking just first out of the money, then the first or second in the money option, that'll also make about 100% return. Now let me ask you a question. If I put $20,000 on a trade and I make 100% return, I've made $20,000. If I put $5,000 on a trade, I'm risking that $5,000, but I make 200% return. I've made what? I've made 10 grand. So by trading in the money options, I'm also risking roughly the same amount. Now, every now and then, yes, I'm going to get like a 50% loss. That's going to happen, and I accept that. I've traded like that for quite some time, but I don't know why. But I started trading out of the money options only because I was focusing on the profits. But I want to be in a situation, right, where if the trade is wrong, I can risk the same amount, roughly the same amount, or should I say, if the trade is just one of those trades, a losing trade, that I can risk the same amount, but when the profitable trades, right, I can literally double and quadruple the amount of profits that I make, only because of that position size. Does this make sense? So there's no way I'm saying that you should place 20% of your account in one trade, or even 50% of your account in one trade and stuff like that. I'm not saying that. Okay, you guys do what you're gonna do. But what I'm saying here is that I hope you can understand the mathematics there. Now put it this way, guys. When you're trading this way, when you're trading in the money options this way, you need to make sure that you have more than 30 days to run, and you need to make sure you get out quickly, right? Get out really, really fast. Don't hold on to those trades. When you see those trades that are not working, don't hold on to them. Give them time, give them patience. But as soon as that market starts to turn against you, I can't really say that because I don't really know your system, I don't really know your plan. But for me, I know that if the market retraces 50 to 75% of my entry bar, I need to be out of that thing as quickly as possible. So I already know that. So that's where my focus is this week, guys, and moving forward. The main thing my focus is focusing on watching that long-term chart and seeing where we are in the cycles and seeing where we are with that there. So guys, hope you have a great week.